Well, I would have been with you 3 minutes ago, and I thought I was. I got like 2 minutes into the show and then realized that I was talking to myself and that I didn't push the live button. So you always must check to make sure you push the live button. Otherwise, it's an audience of zero. And I wondered why no one was asking questions. And yeah, figured it out. All right. So, hello. Happy Tuesday. That's a thing. I don't think people say that, but it's a thing. There we go. Hello. All right, so we'll do just kind of open Q&A and stuff like that. You know what? Let me throw up some prices in the background just so we have a kind of a feeling of what the smoke is going on here. Well, the 7-day looks gross, admittedly, but the yesterday's not bad, and it's not as bad as it was. The 30-day does not look good. It's not a welcoming set of numbers as you go down the list. But yeah, are there any amazing rebound stories? I mean, Meteora, 11% back up, but it was almost 50 cents a couple of weeks ago. So no. So we're really looking at the 1 week to kind of get an idea where the world is. You're looking at the 1 week and the 1 month, the 30-day. And that will tell you more of the story. That's still very recency bias-y, right? But it'll tell you more of the story. So you got to get away from the TA. You got to get away from the cycles and all. None of that stuff really matters. What matters is, to some degree, investor psychology is the biggest elephant in the room. And then you start going down the list from there. Well, what affects investor psychology? Job availability, hours worked, prospects for the future. How do you think the world's going to be in 6 months, 9 months, 12 months? Do you think you'll have money? If you do think you'll have money, you're more likely to spend. Stuff like that. Are you in a job that you don't like and you're held hostage because you know that it's not so easy to find another job? Maybe. Does that mean you subject yourself to menials and douchebags that, make your life a living hell every day when you're done? So you have to, those kinds of things start to beat people down. So if the macro is not good, that infects quickly investor psychology, and negative news spreads fast. So, when the macro picture is bad, and then you say, okay, well, why is the macro picture bad? So that I can get some understanding of how I would speed things up. So, okay, well, unemployment data is important. Inflation data is not important. Has anybody here ever not bought something because it was 2% more expensive? 2%. You went, it was normally $50, but today it was $51. And you're like, oh, hell no. I ain't buying this. $51. What do you think? I made of money? Has 2%, 3% ever really made a difference? Now, it might make a difference if you're looking at a rate of interest on a loan, right? Obviously, buying a house at 4% and buying a house at 7%, big differences. Unless it's your dream house, in which case you'll still find a way to do it. You'll rationalize, you'll justify, whatever. When you want something 1 to 2 to 3 to 4%, it makes no difference. And we know this because when the economy is good and the yield curve is upwards and to the right, people buy stuff regardless of the interest rates, regardless of price imputations, things like that. Like, people buy stuff. They just do. But when the prospects are not good, when you're imagining of growth and inflation expectations, let's just think about growth. If you think the growth curve is not a curve anymore, if you think it's a straight line and it's not even an inclined straight line, you're not going to spend as much. You're going to be like, well, I may keep some money in my back pocket. I may not, I don't know if I'm going to do this. And so those things start to affect behavior, especially after a prolonged time. A great example is right after October. Think about crypto specifically. Right after October 10th and the beatdown, 3 days later, the price bounced right back up. Ethereum got nuked, but it bounced right back up to 4,200 and change, almost 4,300 very quickly. You're like, okay, well, maybe that's it. Maybe we're back. And people they bought the dip. And then it got bounced down below 3,000 and bounced right back up to 4,200 again. And it did this little kind of lower lows, lower highs, bouncing. But people kept buying the dip. But at a certain point, you quit buying the dip. You're like, nah, man, screw this. Well, this is just a rubber ball bouncing its way off of a cliff, on the way down. And that looked less investable. So you don't invest. You stop investing. You put your cash in your back pocket, you get on the sidelines and you wait. When investors get on the sidelines, then that's a bear market. Period. When banks get on the sidelines, it's a recession. Right? When banks stop lending, when cash and credit availability, free-flowing cash and credit availability seize up because banks step back because maybe collateral ain't what it was purported to be. Maybe you have a collateral situation like we have right now, where collateral is sketchy. And remember, collateral was the problem in the great financial crisis, or the great crisis, whatever you want to call it. It was collateral. Collateral was the problem. It wasn't subprime. Subprime was a symptom. They got to the point where they were doing all this because of this bad collateral situation, where people were trying to turn everything into collateral and monetize it and build an investment product around it. So collateral is pretty important, probably more important than cash. You can print cash. You can't print collateral. I mean, I guess in a sense you can. If there's a market for treasuries and treasuries are considered high quality collateral, then in a sense the government can. That's tricky, right? If you print more collateral than the market needs, market might not be interested in it. If there's less interest in those bonds, what do they have to do? They have to entice you with higher yield. That causes more debt service by the government. So you can see where this kind of thing could be a reverse flywheel in the wrong direction. But you got to consider all these things. So nothing is ever so simple. And this is why I had another technical analysis discussion with a friend, which I did my best not to use profanity. It was difficult. But when you math it out, there is no one lever, there's no one magical formula or trick to these markets. You have to take a sum of all this information and you have to weight it. And those of us that are better have a couple of things. One, our ability to weight, not wait on, but to weight, as in to see how heavy something is. Our ability to weight information is the top game theory tool that we have. How important is this input? How important is this input? How important is this input? And then form like an effective investment or decision tree, right? So weighting of information, very, very important. And then having the emotional dexterity so that prices don't mean anything anymore. They mean nothing. Matter of fact, this is a good question. How many of you currently have enough money to sustain a good quality of life? Like, you feel like you are currently sustaining a good quality of life with your current income regime, whatever that is. You have a good quality of life, right? Because the next part of that is, oh, that's cool. What a cool feature. When someone asks a question, it puts a little question mark. Oh, that's a good feature. Well done. So when you guys ask a question with a question mark, it puts a little question mark there. Anyway, for those of you that there's two sides. So for those of you that think you have achieved a good quality of life, then I'm going to say you're going to have more emotional control over your investment decisions. Money is going to mean less to you in the scope of it's invested. Because money that you invest, this kind of well-informed speculation, right? Oh, fundamental analysis. Yeah, no, it's well-informed speculation. So our well-informed speculation better be money above and beyond a good quality of life. Because if you have a bad quality of life and you're investing, that money means more than it should. Right? Money doesn't care about you. Currency units don't care about you. You're not important to a $100 bill. It's as ineffectual as a little neutrino floating through the universe, so tiny that the space of an atom is relatively the same size as you floating in between the earth and the sun. And that's nucleus, electron, just nothing, just insignificant. When you get to the point where your invested money, the money itself is insignificant, and the decision tree is what's significant, your decisions, your repeated good decisions, then you will have escaped. And you're kind of emotionally capable of handling the ups and downs of these markets. If you haven't reached a good quality of life and you're investing, then it's almost impossible to not be emotional about it, right? Because you might be investing money that you shouldn't be. I mean, you probably are investing money that you shouldn't be. You should always invest in your education and your mental well-being, your emotional well-being. Always invest in those things. They don't really cost much to invest in. But your outside speculations, your well-informed game theoretical speculations, front-running other market participants, that's got to be with money that doesn't affect your life, your ability to live your life. You better not be investing money that would normally be used for food, services, bills, crap like that. You cannot do that. Okay? Now, I do run it pretty lean. Like, I've been self-funding this other project we've been working on, and I bring it to within like all the money that I allocate for myself each month. I have a certain amount of money I can spend each month. I give myself an allowance, and then everything that's not part of my allowance is either invested in a game theoretical speculation of front running other market participants, or I've been using it on this other venture that we've been working on, cinema. So, but I still have to live within my budget. I still don't spend money I don't have. When I get to the point where I'm like, no, well, the bills are X and I only have X plus $14, then I got $14 left. I can't go into X and start using X money. X money is general state of living money, like life money, existence money, so they don't go nuts. I spend about $20 a day at Starbucks. That's other than about every other night when I do Uber Eats. And by the way, I know I should never do Uber Eats, but I only do the 2-for-1s, like whenever they have something for free, like buy one, get one free, and I'll get 2 meals and I'll eat it over 2 days, which cuts it in half, which at least feels a little bit less like I'm getting screwed. But I probably my budget is about 18 to $20 a day on Starbucks, because sometimes I'll go twice. I'll do, after my workout, I'll go and I'll grab, they have the chocolate foam cold brew, but with protein foam. Protein foam. It's like 15 grams of protein. What? And I'll do like a bagel. That's my morning one. And then the afternoon one around 4:30, when I'm cooling my jets, I'll swim, and then I'll go to Starbucks and I'll get like, maybe if I get a little ham sandwich, then that's my dinner, and I'll get like another little chocolate foam cold brew protein powder, or I'll just get the coffee, and that's kind of like my little routine. So that's about $20 a day. Okay, so I have to factor then in. Well, $20 a day seems like nothing, except that it's $600 to $620 a month. You're like, oh, shiza. So that's if I get out of hand $7,200, $7,500 a year, crap. Pretty soon you start thinking, geez, man, that's like a car payment. It is a car payment. I'm drinking a car payment of coffee every month. What the crap? So you can, the law of small numbers, the law of large numbers, right? Like you can make something look big and make something look small. It's all if you rationalize it. I rationalize that these things increase my productivity. And I feel like I'm in my little bracket for my finances. That works. Could I chop that off? Yes, I absolutely could. I could lean that out. But I feel like I can rationalize that the emotional benefit's worth the financial detriment. I mean, I hope that you guys are doing something similar. And then again, that you're not digging into X. X meaning your basic necessities for a good quality of life, right? Because I just feel like people are incredibly emotional. When I get mad at markets, I'm not mad at the market. I'm mad at the people. I'm mad at idiot behavior, participants. Like, you want to shake people and tell them, do you want to be poor? Like, do you really want to be poor? They know the Bitcoin community used to say that, have fun being poor. I thought that's a dick thing to say. But think poor, be poor. I mean, it's kind of legitimate. What's the saying? If you walk with lames, you'll pick up a limp. I mean, there's something to that. So you got to make sure, as you guys are investing, that it's money you can be investing. It won't drive you crazy and nuts. And if you're losing sleep at night, I mean, at all. If you're losing sleep about your investments because of the amount of money, you have to deleverage. You have to take money off the table. You have to. If you're losing sleep at night because you're not invested enough, that's the good one. That's the driver. That's the one that'll drive you to accomplish more things outside your investing portfolio, to be able to funnel more things inside your investment portfolio. Like I promise you this, all of the currency units that I make from this current project that we're working on, we'll have several projects, but this one that we're working on, Cinema, I'm building myself my own digital asset treasury consisting of Bitcoin and Ethereum. Lots of it. Because I believe in those things, but only with money outside of X, good quality of life living expenses. And I was using Morpho for some loans, took that money, pushed it into the options market, was trading options. Everything was fine. The market backed off. I looked at the loan. I was getting to the point where it was starting to concern me. The day that it started to concern me, the morning of, got on a call with Brandon. By the time that call was done, 15 minutes later, I unwound the entire loan. Gone, forget it, I'm out. Took the money, pushed it into the options account, never looked back. The minute you come to the point where you realize that you're overinvested, immediately deleverage. Just stop. Go backwards right then. Unwind. It's okay to start over. It's always okay to start over. It's always okay to say, what is the best move right now this second? Same reason I'm gonna, no secret, I'm gonna dump my Jupiter when it gets unstaked. Jupiter may come back. Jupiter could do amazing things, but my heart's not in it. I don't think the team is competent. I don't think Solana is all that interesting on a global level. Maybe it is. I just don't think it is. And I just don't care to have any exposure to it. Before, that was kind of my exposure. Okay, I got Jupiter, and Jupiter does well if Solana does well. Yeah, I don't care. I don't like the team. I don't like the Solana team. I don't like what they've done with the token. I don't like how they've watched it get destroyed and made no effort to fix things. I don't want to be in it. So it's going to become Bitcoin and Ethereum in 6 days and so many hours. So yeah, you just have to make the decision and just chop the head off. You can't, don't barely chop someone's head off. Just chop it off, right? That's good. That's got to be good advice, right? Head chopping advice. Let's see. What metrics should we use to evaluate to determine the efficacy of our investments? Well, it's always you look at bottom to bottom. What was the starting point of your portfolio? And then what was the starting point of you think a bull market? So I look at the bottom of my portfolio when the bullish market starts, and what do I add to it during that, and what do I keep when we're in the next bearish phase? And I don't believe we get bear markets and bull markets in the old school, a year of this, 2 years of that. I think these cycles are weeks to months. We're in a bearish phase or a bullish phase. I don't think there's such thing as full on bear or bull markets. There's too many moving pieces now. Those are just those ideas are kind of over with. Does that make sense? So yeah. So I would say I look at the low point of my account. Well, I look at the point where was my account when we entered the bullish phase, and when the market regresses to like a point now, am I ahead or behind where I was? That's it. You can't look at the high water mark. That will make you crazy. That will make you miserable, right? What metrics should we? Oh yeah, same. So if you just look at the high water mark, you're going to be depressed. Everybody probably hit a high water mark sometime between September and October. And they were like, hell yeah. Or it might have been summer. Hell, it might have been, many of you might have high water marked this time last year in the post-election bliss. Whatever it was, in the last year, many of you had hit your high water mark. Okay? And if you're looking at that high water mark as what success is, you've missed the point. Charlie Munger and Warren Buffett said on a few different occasions, they had these, what I think they call them these Sigma events, right? Where their entire portfolio, the whole thing was cut in half. They said I think Charlie Munger in an interview he did, he said they've had 6 of those, 6 Sigma events. 6 or 7. Think about that for a second. You are probably the top 2 value investors on earth in history. Well, other than Nancy Pelosi, because she's so good at investing. But you're one of the best. I mean, historically, in going back to like humans in campfires, you might be the 2 best investors for the longest amount of time in effing history. And you've had 6 or 7 occasions where your entire portfolio gets cut in half. And yet they don't change their swing. They just keep on moving. They try to learn from their mistakes. Okay, what blindsided us? What did we not see? Right? But they stayed consistent. And the many hundreds of billions they generated is kind of a commentary on how effective you can be when your time horizon is further out. Admittedly, we don't have that same time horizon because the robots are coming, but we have something. We don't know what the something is. We have something coming. So we have to kind of maintain an objective look at our portfolios. So I look at the bottom of my portfolio when the market starts to go into what I say is a bullish phase. And I say, okay, well, let's say I was at X. Now I added 120%. But I lost 70%. Okay, well, I'm still up. If I added anything, it would depend, wouldn't it? If I added 120%, okay, so I did a little bit more than double. I did, a little bit more than double. If I gave back 70%, I'd actually be lower. If I gave back 70% of the 120%, I'd be fine. So that would mean that my risk management strategy was not well formed or refined. But I think from my high watermark over the last year, well, let's see. Rather than me guess at it, let's see. What was my high water? I know what my high water mark was. I do know the number. Okay, let me think. So I'm down from my high water mark about 35%. But from my past low, I'm up about 60%. So even netting out the losses, I'm still up about 60% from the trough I was in, a couple years ago, after FTX, when all that bottomed out. So net I'm up. Is it the numbers that I would like to see? No. I mean, if I go back 45 or 50 days, I was a bit higher. I was probably at all-time highs. So a little bit of meat has been taken off the table, but none of it is the amount of X, which is my amount for daily living and just generally good quality of life. Because I'm not going to jeopardize my well-being, my emotional well-being, other than when I play VR. That's a direct attack on emotional well-being. But other than that, I'm not going to financially risk leveling down. Just not willing to do it. I'm okay with not winning. I'm not going to lose. Right? Sometimes just not losing is a win, is a victory. Doesn't sound good. That's not something you want to put on a bumper sticker or tell your kids before they play soccer, but it is the truth. All right, let's see. Seems to me the 10x days of crypto Wild West are over and now doubles as trades. Yeah, I think that's a good way to look at things. I think the days of the 10x are probably mostly behind us. I think we're in the days of the 2 to 3x. So I've been thinking about that. Because, we had the 10x take 20, 2x take 10. I think for a while now, my mindset is 3x take 33. Get your original off the table. Yeah. Let's see. Do we know? Yeah, the snapshot I think was in the beginning of November 2nd, 3rd, 4th, something like that. That'd be a branding question, but I'm almost certain they already took that snapshot. Well, yeah, 10x. I think Green. I think what coverage was saying is 10x in a very short amount of time. I don't think we're going to see $870,000 Ethereum next year, or $29,000 Ethereum, or $870,000 Bitcoin next year. Will we eventually see $1 million Bitcoin? I absolutely believe we will. I don't even think that's a thing. I mean, I just don't think that's not even a mental leap to get there. I think that's pretty easy. I think a $10,000 to $15,000 Ethereum is pretty reasonable, especially as inner op comes as. Remember, Fusaka's just in, 6, 5, 7, 8 days, and then we have a Fed meeting following that. Like, there's all sorts of things that could be read as being quite positive. So. Yeah, but I think in a short time period, the 10x's, I think coverage is right. I think in the short time frames, it's not emotionally stable to be expecting 10x's. Every now and then you're going to get some little shot in the dark, some little flash in the pan. Yes, but I don't think it's the norm anymore. I will tell you, there's some assets that I do think could 10x in a somewhat short period of time, meaning a year. Let's call it a year. So that's a behind the wall thing that we would talk about with the private clients. Well, with all of you guys. But so I would say there are a few of those that I think in a year's time could do a 10x, but the short 10x's, I do think that game is over with. And I think most of crypto is useless. I mean, even some of the assets that I like are kind of useless. Jupiter, the token, is useless. Just saying it gets me rewards doesn't mean anything. If it's in-kind rewards, then it's just debasing the currency. That's not valuable. It's just a form of inflation, right? Just eroding the value of each purchasing unit. I don't think that's valuable. Let's see. I don't see. Everything else seems like a fail. Yeah, I mean, there's some 10xers out there. I could see a few assets that could 10x. And the cheaper things get, the more likely a 10x is, right? I mean, if it's likely at all. So, yeah. But I think when you see these market drawdowns like this and you see the behavior of people, then you get a better picture of why we are where we're at. These assets sold off because panic. That's it. They just sold off because panic. And when you see panic like that, and you see certain assets that didn't sell off as much, like I see XRP didn't sell off as much. Well, it had, but then it recovered last couple of days, which is very odd to me, except that they have a cult following, and religion is powerful. And they also have a lot of money at their disposal to kind of thumb the scales a little bit. I think that there's a lot of borderline illegal behavior on that team. I think they push up to the edge of the law as far as what they do with, of course, because they all got indicted for fraud. So yeah, they absolutely do. But you look at it, all these dudes are on the edge of fraud and corruption. Look at every crypto project other than Ethereum. Every single one of these projects has had people that have been corrupted. Solana, FTX, and all those scumbags. Luna. Look at all those scumbags. XRP, jail, almost. Fraud charges dropped just because the government thought it would be easier to pursue these, which they won, right? They sold illegally, unlicensed securities. They lost in federal court. They'll have you believe otherwise, but if you read the decision, it's pretty clear. Ripple, the company, broke the law. What didn't break the law was the technical ability for them to sell on a secondary market XRP. That's the decision. The decision is not a win for Ripple. It's a loss. It's you're corrupt. Here's the fine. So, but if you go through all these projects, Tether, complete scam, giant Ponzi scheme. No one cares. No one cares. BitMEX, indicted, wearing orange. CZ, indicted, jail, prison, pardon after I don't know how many billions of dollars in fines, $3.4 billion in fines. That probably earns you a pardon, right? You just go down the list. Corrupt people everywhere. Arthur Hayes and Mike Novogratz. Corrupt. AF. Raoul Pal. Corrupt. All these dudes are corrupt. They get caught stealing. They don't even shrug. Justin Sun, copy and paste, plagiarizing douchebag that he is. No one cares. The penalties aren't harsh enough, and I don't know. It's very, that part's frustrating, but you also can't go down that path. of being like, oh, those guys are all. So that's just that kind of thinking doesn't benefit anybody. Criminal's gonna criminal, right? Criminal's gonna criminal. So who cares? It doesn't affect us. It doesn't make a difference to us. You know what did more damage than anything else? A bunch of ancient whales selling Bitcoin. Honestly, that did more damage to the market. Like I said, I love Jeff Snyder. He's my buddy, but he was talking about, oh, this is part of private credit. That's why Bitcoin and all this kind of bullshit. It's $45 billion worth of Bitcoin being sold by a small handful of people in a very short amount of time because they're stinking ass rich and they don't want to sell Bitcoin less than 100,000. It's like a line in the sand. And when Bitcoin wouldn't eclipse 126 and it started coming down, they started hitting the bid. Obvious, every day and perpetually. You don't need to be Sherlock Holmes to figure that out. You don't have to, go to an archaeological dig and wonder if this claw was used for attacking or for defending. No, none of that. We know what happened. We know it happened on the back of some weird tweets and some macro uncertainty about China and, all of these levers that push the retail market to panic and a bunch of ancient whales to say, F this, you know what? Dump it. Dump the whole effing thing. Dump all of it. We're billionaires. Do you want to not be a billionaire? No, you want to be a billionaire. I want to be a billionaire. So I get it. And if I was one of those ancient whales sitting on a bunch of Bitcoin, a completely undeserved reward, by the way, because most of them had no clue what Bitcoin was going to do. Good on them for holding, by the way. But most of them, their total investment was 50 or 60K, maybe. Most of them $8,000 to $10,000. They just got lucky. It is what it is. Some people just get lucky. Lightning strikes. That doesn't affect you and your portfolio, though. You still have to be right-minded and assume lightning's never going to strike for you. You're going to have to do it the old-fashioned way. You're going to have to get in the trenches and effing grind. There's just not going to be an easy path for you. And also, if we do live in a simulation, there's a good chance that all of those apocryphal stories of luck and all that, they're all fake anyway. None of that stuff happens. It's just background filler information for the first-person shooter that you're living. Like the first-person shooter video game that you're living your life through. They show all these kind of scenarios so that you're like, to test your emotional fortitude and your dexterity to kind of overcome. But maybe none of that's real. Maybe none of those people exist. Maybe I don't even exist. Ooh, interesting. If I'm just a marginally aware NPG or NPC. So anyway, let's see. I can promise the money you pay this schmuck to talk sure won't 10x. Which schmuck? Mike, you're talking to me. Okay. Maybe that's it. I don't mind. Thanks, Mike. Thanks for your thoughts. But Michael, for context, the people that have been with us for a while have had many 10Xs, some 100Xs. But you know that, Michael. You know that because you've been around for a while. And you're probably really, really rich and successful. You probably could teach us all sorts of things. We just don't have time for that. It's only 1 hour, right? What can we do in an hour? Consider the bubble burst 2000. Tech didn't die. It just shook out the weak ones that didn't transform with the market. NVIDIA would have been a great investment. Yeah. Gosh, I knew a guy. He's an insurance salesman. It's funny. He's a really nice guy, but he's kind of simple, right? I have coffee with him. I used to have coffee with him like once a week. Evan, really nice guy, but simple, right? Like he's not a tech bro. He's not a forward thinker. He can't spell AI, but he was a diehard NVIDIA. For some reason, this is not the guy you would think either. It's like an insurance guy, but he was like everything. He would listen to Jackson Wang. He would listen to every one of his talks, his speeches, like everything. He just devoured everything this guy said. He's like, NVIDIA. I mean, a while back. And I remember when he was at a point where it's like, I'm just putting like $1,000 a month towards NVIDIA. And you think, okay, well, never going to get anywhere. Yeah, except he was doing this years ago. I bet he has 30x'd his investment portfolio in the last 5 to 7 years because he was so dead set. So, and it wasn't just NVIDIA, right? He went full in AI before it was cool. So anyway, there are people that kind of see it coming, and they come out from all walks of life, like all over the place. But also give it to Evan for having the tenacity to stick with his idea of where tech was going. Now you can make a lot of money without being anywhere near tech, but things that aren't tech, things that are in the atom space don't scale very well, or they don't scale very fast. Give it to NVIDIA for being in the atom space and scaling well. Like, well done on them. And all those people betting against them, good luck with that. That's like people saying, ain't no AI gonna take my job. Okay, well, that sounds like you're already replaceable, because anybody that would make a statement like that is mostly replaceable. I'm sure there is not a job that AI won't take. Any job, any. Because how did we learn? We learned by being indoctrinated by the little social net we were around, and whatever influences we got around us, right? That's how we learn. We saw things, we copied things, we parrot things, we remember some things. So why is that any different? Where's the magic in the goo? Oh, well, the neurons, the human brain is very complex structure. Yeah, because it has to do a lot of very interesting biological things that a non-biological, brain wouldn't have to manage, which would free up a lot of compute capacity to do other things. Oh, and also, near perfect memory. So you start thinking, gosh, I don't know that I don't know that there's a lot that I do. Oh, nice. That's badass. You start thinking, I don't know that there's a lot that I do that the robots and the software won't be able to do. And then people say, well, it's something about human. And I guess there's something to that, like something about being human. Because sometimes people like I like when I see something that says it's handmade, like on cars now, one of the options is, like, for some of them, like for a Ferrari, it's like hand stitched. Like I have on one of my cars, I have yellow stitching, which would seem obnoxious, but it makes sense in the car. It makes sense. Black with yellow, whatever. It's yellow hand stitch. You're like, oh, that's cool. Like the idea that a human, did that is pretty badass. It's probably not as good a quality as if a machine had stitched it. Like over the life of the car, my stitching probably is looser and less stitch worthy, excellent level, because it was handmade than if a robot had done it. But handmade means something, right? Oh, it's a handmade jacket. Okay, cool. I mean, you might say, I want a human surgeon. I don't, man. I want a robot with a human behind it. I want a human behind it, looking at the robot doing my very, very complicated surgery, where I can't afford to have the guy sneeze while he's cutting open my spleen, or doing something on my heart, or even if it's part of this new replacement for my new badass AI mechanical heart. That's if we just don't have nanites go do all the work. Let's see. I've been living off those 2 measly wins for years. So buddy, Michael, have you been around for a while? I feel like maybe you haven't. You realize that the whole Fetch and AGIX thing was just 2023, right? You realize we've been in this market since 2014? You do know that, right? Like we started streaming in 2019, 5 years before Fetch and AGIX. That's just one tiny group of assets among many, many assets. So yeah. And not everything's a winner. So I don't know. I guess I don't know. Maybe you bought the wrong stuff, Mike. No, Mike. No. I like it. I mean, you need people that are harshly critical when the criticism's valid. It is important. And you can take the other end of it. Typically, I'm not batting for Mike here, but typically harshly critical people do have a generally higher IQ. I'm not telling people to be negative for the sake of making people think your IQ is high. Now, this is a broad-based statement, so let's understand we're painting with a wide brush. Typically, people that are hypercritical but factually hypercritical. And this is the thing, Michael, you got to be factually hypercritical. You can't just be hypercritical. Hypercritical for the wrong reasons is no different than being blissfully ignorant. It's just a negatively ignorant. But in totality, people that are harshly critical with facts behind them tend to have a higher IQ, but also a lower level of general happiness, like just generally less happy people. So I'm going to guess, based on Mike's statements, that he may or may not be generally less happy than a lot of people. And it's easy to succumb to self-serving arguments when markets are down and money's not great. But for context, Mike, I bought Bitcoin at $692, and I've kept buying it. And I've made ridiculous money just on Bitcoin. If you forget everything else, if I go back through my original laundry list, I've had at least, 7 or 8 100Xs. I've had a lot of 10s and 20s. Yeah, I mean, just in crypto, not in my other stuff, because I still consult in the gold business, but just in crypto, in between 2014 and now, on the good side of 8 figures, well into the 8 figures, just by being consistent and sticking around. Were all of them winners? Of course not. Probably 2 out of 10 were winners. But you manage your losers, and you move when the story changes, you move your money over. So what if you say, okay, Fetch and AGIX and all the SDAO losses? Well, let's think about that just for a second. All the SDAO losses. What all losses? GMRT, yeah, that one hasn't done well, but I sold tokens the whole time. So yeah, I'm a little bit below a break even, but it is what it is. SDAO I made money on. I was in on the SDAO ICO. I got it at 22 cents. I sold it in the many dollars range. I bought back in when it collapsed. I sold it over 75, 80 cents. I got even after it collapsed, I got a 3 or a 4x out of it. So, okay. I mean, Singularity DAO probably put $200,000 in my pocket. So, I mean, if that's a loss, if you look at any market, it depends on where you were when you got in and where you were when you got out and how you dollar cost averaged in and how you manage your emotions around it. So even a lot of these losers, forced me to make better moves. Look, I had a double on SUI. I got in at 192. This is a recent example. Got in at 192. I didn't sell at the top. I got out at 349, 348. We covered that last week. 349 and 348. I put it in to Aster, most of it. I put most of it in Aster, some of it in Ethereum. In the Ethereum, I put it in to my options account, which I sold against. So I'd have to do the math on that. So let's forget that for a second. But Ethereum is down 30%. So let's say I lost 30% there. But remember, I was up 100%. I took the rest of it and I bought Aster. Aster got clipped. It's like 40 or 35% down. Okay? So you say, oh man, you got destroyed on Aster. Well, I had a 2x and I was borrowing against that. I was using that as a leverage play to take that cash from Suilin and put it in my options account, which I made. I mean, I was just in that options account. I was up $3 million in a quarter, in 1 quarter. That's $3 million. Now that might not be money to you, Michael. To me, that's money, baby. And then I redeployed it. That money's been redeployed. Some of it went, pushed down the loan. Some of it, well, I just eradicated the loan. So I could say, oh man, I'm losing on Aster. Yeah, that particular trade taken out of context is a loser right now. But if I had stayed in Sui, and Sui's $1.49, so I would have lost $2 per token on that. So it's down considerably from that. So it's down, what, 65%? So I saved 30% of my 100% gain. So still up on the aggregate. So it's the decisions you make when the accounts are banging around. So even what seems like a loser is not necessarily a loser. And I think when you frame things too simply, I mean, I don't think Mike's still here. I think he's already booked it. But the point is, this is good for all of us. Frame things with the appropriate context. With the appropriate context. Be honest with yourself. If you made a bad decision, or if you made a decision and it turned on you and the market s the bed, or just the market changed, the dynamics of the market changed, whatever, that's okay, right? That's okay. And dude, that's awesome. If you got in at 6,700, Mike, you're doing good. I would stop in, listen for a bit. All right, I don't know, Mike. One, I'm glad you showed up every now and then. Also, you guys know I got a pretty thick skin. I don't really care if people like me or not. I enjoy my own time. So you're not going to hurt my feelings if you don't like what I have to say. And if you stopped in over the last 4 or 5 years, great. You had nothing to do. You joined us. Awesome. The fact that you got 17 Bitcoin at 6,700 or DCA, that's great. That is awesome. And I hope you're a competent fiduciary of that windfall. That's good money. I hope you're monetizing that windfall. I would have taken that Bitcoin, converted it to IBIT, and I would be selling out of the money calls on it to generate some yield against it. It's just one guy. Anyway, yes, have a good day. Good day to you, sir. But any of these trades taken out of context without the complete picture, they're not going to look like reality. Just in the same way that I have some early 100Xs back in the day when Ant anyway, it doesn't matter. Point is, in 2017, everything you bought did 100X, everything. I got, well, not everything. Like Filecoin. My original Filecoin trade was, I got in on the ICO. It was a little bit over $5 a token. I sold over $200 a token. I bought back in the $5 to $8 range. So basically, I got a full cycle out of it. It was a big win. My second Filecoin trade was a loser. I got in at $5 to $8, and then I got nuked down to like $3 or $4.50. I don't know where I got out. I have to go look. Let's say $3 or $4. So I lost on that one, but I didn't invest the entire windfall. I didn't take the money that I cashed from $5 to $200. I didn't take that $195 gain, or however many X's was 39X. I didn't give back the 39X. I just bought my original position back. So, okay, well, then I lost it. It is what it is. I think I added to it. I think I had 50 or 60,000 Filecoin, and I probably lost, let's say I probably lost a cool $2 on that. But when I transitioned Filecoin, it was late April, and I transitioned it into Ethereum, which went from 1,400 to just under 5,000. So again, any single trade taken out of context is not enough. Your portfolio is an organism. It's a living organism. Your decision making should be living, self-educating, self-evolving organism too. And what I've been doing has been working for me and for several people. So you do you. Everybody do the best you can with what you've got. Take everybody's opinion with a grain of salt. There's a lot of noise out there, but there is light at the end of the tunnel, and it's not always another train. It's not always another train. Anyways, let's call it a day. Brandon will be back tomorrow. We'll rock and roll. For anybody that wants to check out what we're doing, agi.film. I don't know if you guys know that's the new project we're working on. It's called Cinema. So you guys can go look at agi.film. We're going to be rolling out some really cool tools for creators. Anyway, stay in school. Don't do drugs. Don't do anything about pouring salt drunk, strung on a meth grandmother, or Brandon wouldn't do. I got no clue what the weather is down there, but I'm guessing it's terrible because every time I ask him about the weather, it's terrible. Remember, it's Thanksgiving week. Be nice to some people. Maybe tip your baristas. Give them a little extra spending cash, though. Put a 20 in their pocket. Be cool. Be cool, bro.